Hi, welcome back to my channel, Preparing for Retirement. My name is Martha, and I am preparing for retirement. Going to retire in January of 2026, and my husband and I will start our retirement journey, which will consist, at least initially, of slow traveling all around the world. So today is going to be the day for my December 2024 net worth update. I do share every month on the progress that I'm making towards my goal of having a net worth of $750,000. So without ado, let's just get right into it. I know that if you are currently investing in the market, then you do know that December was a kind of a rocky ride. 2024 overall was just a record year. It was fantastic in the market. Not so much if you're not in the market. There was cost of living was very difficult for a lot of people. But if you were in the market, there was great potential for growth. So I think the even with the December volatility and loss, I think that the market ended up somewhere around 22% increase over the year, which is, more than twice the average over the history of the stock market. It's more than twice the average per year. So without further ado, let's just go ahead and get into it. So first update I'm going to make is to my emergency fund account. And it did go down. The primary reason why my emergency funds went down is because I did want to take advantage of the buying opportunities that there were in the market particularly with the adjustment. I think it was on the 18th of December. It just dropped real quick thanks to an announcement by Jerome Powell. We won't get into that. But it created a lot of buying opportunities. So I did take a lot of cash out of our emergency funds, which I would not normally do. And I did make contributions to our IRAs for the year. Normally, I kind of wait until the beginning of the next year to contribute, at least on my side, for my contribution, because I need to see, according to how much money I made, whether I have to make a Roth contribution or whether I can do a traditional IRA. I'm not going to get into all that, but just know that there are income limitations. And so normally I wait. But this time I just went ahead and just made some purchases because there were some real bargains to be had, especially after the 18th. So that, as I said, that did go down. You're going to find that just about everything went down across the board, and that's because of the change in valuation, primarily. So our non-retirement investment, we don't have a lot that's non-retirement, because we do try to maximize our retirement savings. So plus we're in the middle of home renovations. So so our non-retirement investment went down. That's primarily a difference in valuations. Our traditional 401k, or my traditional 401k at work, went down. That's valuation. 401k, my Roth contribution, again, went down. I was continuing to contribute to both of these. So what you're seeing is the loss in December. That's what you're seeing. Just how bad that was. Uh, it happens. It happens. You have good years and you have bad years, you have good months and you have bad months. Overall, it was a great year. So, okay, moving into our IRA accounts, my husband and I have IRAs from former employers that we've rolled together. And the total on that, again, went down despite contributions. And then Roth IRAs, same story. They went down. The my HSA, interestingly enough, went up. So I do have the majority of that invested. We are cash flowing medical costs at this point in our journey. So it did go up. So that's just a function of what you're investing in. So that's good. Our real estate equity also went up. Now, I think I have explained this before, but I'll explain it again. Um, in order for us to get a valuation of our house, since we are going through a renovation, or have been going through for a couple of years now, a renovation, we take the average of three different listing services. Um, we take Zillow, Realtor.com, and Redfin, and we average those valuations. None of them, I think, in and of themselves are that accurate, but I think between the three of them, you can get a pretty good valuation. So currently, our home is showing an average value of 538,000. We have had a couple of houses sell on our street. And so if we use the square footage that they sold for and, do the multiplication for the size of our house, it does show to be pretty close, maybe a little bit less, but not much. So I'm going to go ahead and just stick with that same method. So subtracting out our mortgage and our home equity line of credit or HELOC, you come to real estate equity of 290,000. And that will leave our net worth for the end of December at $586,000. We are still shy of the goal net worth of 750, but I'm just going to keep plotting. I'm just going to keep going. So the amount short is 163,000. So we are making progress. Now, I want to call attention to the fact over here in column N that our dividends and capital gains were unusually high for December. And that also helped us to not see as much of a loss as we would have. I'm trying to think. I think that the stock market was down 3% and somewhere between 3 and 5% in December alone, between the ups and the downs, the adjustment, and then some recovery, but not enough recovery, and then the downtrend at the very end. We didn't see that full drop, and part of that is thanks to the fact that we do keep contributing, and then also because of this stellar month of dividends and capital gains. The capital gains for December ended at $5,500, which is fantastic. I have another video about that I'll put up here in the corner where I talk about, how I still keep mutual funds. I know the people don't talk about them a whole lot. It's all ETFs and, other investments, but I do keep my old mutual funds. They pay out either only at December, once a year, or they pay out twice a year. A lot of them are averaging somewhere between 6 and 8% with those payouts. Capital gains are, I've been very pleased with the investments, and they're very slow but steady growers. So they're not super volatile. I did do some rebalancing in them. So I used to make a lot more with the capital gains, but I was extremely tech heavy. And, having lived through the dot-com bust, it was getting more and more tech heavy as we were reinvesting proceeds automatically. So I did do some rebalancing. So this year I only saw a little over $5,000 in capital gains from those funds. But that, along with contributions, helped us to see some growth for the month of December. Not much, not much. But if you look at the total month over month increase, I'm up $2,400. And then that ends up being 0.5%. So given what happened in December, I will take it. I will take that increase. Remember, you went down, but you actually added shares because you got bargains. So you added shares to your account. So when the valuation grows again, when it moves back up again, what you're going to see is a greater bang for your buck because you got such good bargains. So if you look off to the right, I'm just going to go into, I did increase my contributions for the month for my 401k, my HSA, and my savings. And I have mentioned before that I typically get a merit increase in December, and I go right into my 401k and I immediately increase it, which I did. So I've put a placeholder value in there, but we'll see how much it really is, and I'll update it once I get paid in January. And then right now, I still have the dividends listed at $2,000 a month average. Thanks to Snowball Analytics, I'm seeing that they're really going to average more than that. They're going, at this point, it looks like about an average of $3,000 a month, which is great. And I have them set to drip. It's about 40% of the dividends will reinvest back into the original stock or fund ETF that it came from. The rest will I will be using to purchase new like the Dividend Kings, like Verizon, you know, there's a bunch of them. Or I will be buying growth funds or growth stocks with them. So I am sort of changing my strategy just a little bit in the last year. So I will update that as we have returns for a few months, and I start to have a little bit of faith that, yeah, it's going to be more like $3,000 a month. But that will really come in handy, and it will help us to meet our goal of the 750,000. But other than that, my strategy has not changed in that I will continue to try to maximize our contributions, and I will continue just reinvesting and trying to find bargains wherever I can find them. So if you look at our net worth screen over here, you can see that we are still seeing the progression. Here's 2021, and you can see that we are still trending up, although we have little dips along the way, and we had another dip this last month. Went from 626 down to 624. But again, we trend up. And so that's exactly what we're looking for, is just a continuation of the trend. So you're going up, you're going down, but eventually you're just going up. And that's exactly what we're looking for. So I hope that year 2024 was all that you had wished it to be. I hope that you were able to meet some of your goals, whether they were financial, personal, or professional. And other than that, I'll be sharing in the next few days about how we were able to make a trip to Philadelphia, and a 5-day trip, and all we paid for was our food and our gas to get there. So that video will come out in the next few days. And until then, I wish you all a wonderful Friday and a fun weekend. God bless.